Right. Okay, guys. Let's start our last lesson. While doing this one, let's finish the first, second, and third lesson past papers as well. Now, when it comes to this one, you can see the fourth lesson, preparation of financial statements and end of the period adjustments. Mostly, this will be testing in the second lesson, right? But we need some knowledge for the first. First, mostly this is tested in the second paper, but we need some knowledge for the first paper as well. That's why I'm starting it right now. What are the things included in here? You can see that included in here are capital and revenue expenses, right? Accounting concepts, financial statements of a sole trader, other receivables and payables, irrecoverable debts, incomplete records, calculation and interpretation of accounting ratios, right? Uh, Financial statements of a partnership, financial statements of a manufacturer, right? These are the things need to be covered in this lesson. So what I'm going to do, I'm going to start with the first one. Okay, let's see. Uh, in this chapter, we will focus on the financial statements for a sole trader, partnership and manufacturing business. We will also look at evaluating the now in here we cover, there are different kinds of business, sole trader, partnership, so company accounts, likewise more things, but in here we concerned about sole trader, partnership and the manufacturing, right? We will also look at evaluating the financial statements by introducing ratio analysis. We will also we will look at the differences between capital and revenue expenditure, as well as making adjustments to the financial statements using depreciation, other receivables, payables and irrecoverable debts. The content covered in this unit will be tested in paper 2, but also will also help you to clarify and understand the topics in the paper 1, right? Now you can see assessment objective. Demonstrate a knowledge and understanding of accounting terminology, principle, procedure, and techniques. Assessment objective 2. Select and apply their knowledge and understanding of accounting procedure to a variety of accounting problems. Analyze, evaluate, and present information in the appropriate accounting formats. Communicate the reasons and explanations. These are the things covered in here. Right. Is it clear? You send me a thumbs up. Let's start with this one, capital and revenue expenditure. Okay, within 2 days, I think mostly we will be able to cover it out. Capital and revenue expenditure. Right. Hope it's clear to you. Right. Okay, write the main heading and write the subheading, capital and revenue expenditure. Capital, revenue, expenditure. Right. Learning objective, explain the terms capital expenditure, revenue expenditure. Explain the importance of correct procedure for capital expenditure and revenue expenditure. Getting started. In this chapter, we will examine the differences between capital, revenue expenditure, capital and revenue expenditure. Capital expenditure is linked to the statement of financial position, and revenue expenditure is linked to this income statement. Right. Capital expenditure includes building or renovate works. I'll explain what is the term called capital expenditure. Right. Now, normally, there are some payments we incur for day-to-day payments. For an example, salary payments, right? So we repair those kind of things. Those are the namely we call as revenue expenditure. It's generate mainly for the revenue generation, which is for the sales. Capital expenditure means, sometimes, we spend some sort of money to acquire something, or the like enhance the capacity or the development of those assets. These things we concern as the capital expenditure, right? So right, capital expenditure, you can see capital expenditure occurred when a business spend money to buy non-current assets. Non-current assets mean the assets which we expect to use more than 12 months for a longer period of time. When we purchase a non-current assets, it's a capital expenditure added to the value of existing non-current assets. Add to the value of non-current assets means like we enhancing the value. This explains include the cost of acquiring non-current assets, the cost of bringing non-current assets to the business, the legal cost of buying premises, the carriage inwards, cost of transportation on machine, equipment purchase, any other cost involved in preparing the non-current assets for use, installation costs, upgrading to existing asset. Capital expenditure appear on the statement of financial position. Capital expenditure tend to last longer than a year, usually involves a non-current asset. Right. I'll explain like this. Under that, let's write the subheading capital expenditure. Right. Now it's like this. Now think this is India. This is Sri Lanka. The ring part is not. And this is Sri Lanka. Right. Now, right. You know, right. We purchased a machine. Purchased a machine from India. Now, think to this Indian supplier, he paid $500. Send me a thumbs up, right? And also, we need to bring it to the Indian harbor. Sometimes that person paid, but sometimes we need to bear it. And from Indian harbor to Sri Lankan Colombo harbor, right? So Colombo, we need to bring it. So all these things we already cost 100, and we need to pay some statutory requirement in the now our factory in here. See our factory in here, the factory, right? And we need to release it and pay some government taxes. Let's pay it 50, right? So government taxes and the like, we need to pay some like harbor different duties and the taxes and duties. And from Sri Lankan harbor to our business place, I think this much is 40 to bring Indian place to harbor. From Sri Lankan port to our factory, it's 10, 10 already, right? Then after that, to fix it in here and do some trial runs, we need to further spend 20 rupees, $20. These are the total cost, right? So our purchase price is 500. Then after that, right, like uh, to bring for carriage inwards, uh, Indian to place to Indian harbor 40, Sri Lankan uh, harbor to Sri Lankan place, our business place in order to get the 50, right? Legal cost sometime like not only that, by 100, you can see this is shipping charges. This is transportation and shipping all together, which means 150 is this, right? Then after that, like Then after that, government taxes we paid 50, government taxes 50, right? So for installation we spend around 20. Altogether, 670, 720 is the cost. Now this is the total machine cost. Now just remember, in here we identify all these are for the buying, right? Buying cost. Why buying cost is not the purchasing price? No. Why? In here, according to the LK's like 16 standard in Sri Lanka, still in the international standard also 16. Cost means the amount we spend to bring the assets to the present location, and usable condition. Now, without these things, we can't take it to the present location and the usable condition. We need to come and fix. This is not about the repair. Send me a thumbs up. We need to spend all the amounts to bring the assets into the present location and the usable condition. Is it clear? That's why first one, buying cost non-current asset, like the cost acquiring non-current asset, the cost of bringing the non-current asset to the business, legal cost of the buying premises, the carriage inwards, right? The buying other costs involved, preparing the non-current for sale, installation, upgrading existing, those kind of things, right? All these things we concern as capital expenditure, right? And also there's another thing. Number one is the buying cost. These are not normal expenses, capital expenses. And also you can see next one, added to the value of existing non-current assets. Now for an example thing, right? The number one. Number two is all about added at to the value of existing non-current assets. Value of existing non-current assets. For an example, think like this. By the time, right, in this machine, right, we fixed another new part to enhance the capacity. Fixed a new part to enhance the capacity. It is not the revenue capital. Why? From this our non-current asset value, again the capacity and everything increase. Now revenue expenses means those are like day-to-day thing. Capital means like if we upgrade the thing, right? If we take like for an example, in a car we fix another new four wheels, right? If we like fix new four wheels, again our value will increase. So that those kind of things we concern as a capital expenditure. Now for an example number one, Mike buy a new van for 15,000 for his fish delivery business. He fits the van. He fits the van out with a refrigerator unit costing 1,000. He puts its logo on the side of the van, which costs 250. Therefore, the total capital expenditure of the van is 16,250. Now, he buys 15,000, and also he purchased a refrigerator 1,000. Now, it is still we haven't taken it to the present location and the usable condition. Also need to add he puts its logo on the side of the van. Now, logo means, we need the logo about the business, right? So till that, we add everything as the van price, right? Capital receipts are the sale of non-current assets. They should not be included in the business revenue, as they are not on normal day-to-day sales of the. These transactions should be recorded cash or bank. Only the profit or losses made of non-current assets should be included in the income statement. Now, right, another thing, this is about capital expenditure. If we take about capital receipt means, right, capital receipt means, think by the time, if we sell these non-current assets, if we sell a non-current asset, it's a capital receipt. Why? The total non-current, the machine price is capital expense we spend. We sell it, it is a capital. Now, you know, right? It's like this. I told you, we prepare P&L, right, including income and expenses, including, to find the cost, to find the profit. We prepare SFP, including assets, liability, expense, asset, liability, equity, to present this financial position, to present the, right. Now, I got two things, right? First one, capital expense, which means, two things I gave: buying cost, adding value, right? And capital receipt, which means selling the asset, right? That is another, right? Sale on, right? Profit of sale on non-current asset. Three things are. Profit means what? Now, for an example, this is just the selling price, right? Selling, right? Now, profit means, like, think we purchased a non-current assets. Purchase, I told, it's 720. we depreciate it to 620, right? Now we selling it to 500. We purchase for 720. Depreciate means we value decrease it to 620, which means the net value is, you know, how much? 100,000, right? So net value means, net value is how much in net value 100. Now 100, we when we sell, we concern the net value, purchase price minus the depreciation. Purchase price is the capital expense. Purchase price is the capital, right? Selling price is the capital receipt, right? Now there's a profit of 400. Why? Net value is 100. We selling it to 500. Now the profit is 400. If so, right? The profit is 400. Just remember, I just want to tell you the purchase price is 720. That is the capital expense. We selling it to 500, and already we depreciated it 620 up to now at the point of depreciation, selling, right? Now just remember, the capital expense, it is an asset. If it is asset means it's included in the SOF. Capital receipt is also asset. Now when we purchase, capital expense means the purchase of asset increase. When we sell it, asset decreases. This also goes to the SFP because asset things goes to the SFP. If there's a profit of selling non-current asset, is it an income, not the sales? Income is the revenue. Income. Revenue things are goes to the P&L. That is the thing I want to tell. Just remember, when we purchase a non-current asset, it's a capital expense. Or when we add value added, it an asset decrease goes to the SF. When we sell that non-current asset, our asset decreases, so we remove that from the asset SF. When there's a profit on selling, which means we purchase 720, we depreciate it to 120. Normally, we concern the uh, profit through like net value minus selling price minus the net value. Profit equal selling price minus net value as a profit, right? Selling price minus the net value. I'll explain in future as well. Then we get the profit. The profit goes to the P&L. Easy, clear to send thumbs up, right? I just want the thumbs up, right? See in here. The capital receipts are the sale of non-current assets, right? Write it and raise two hands. Write it and raise two hands. Everything. Write it. Done, right? Okay. Now let's go to the revenue expense. Revenue expenditure. Revenue expenditure is that uh, does not increase the value of the non-current asset. It's not increase the value of the capacity and everything, right? But it is incurred in the day-to-day running expenses of the business. It can include inventory, purchase of inventory, wages, heating and lighting, expenditure, impacts on profit. These things goes to the profit. The difference between capital and revenue expenditure can be explained when considering the cost of the purchasing and running a motor vehicle. The expenditure we incurred in acquiring the motor vehicle is classified as a capital expenditure. The cost of petrol we use to run the vehicle and any maintenance cost, that are revenue because it's for the revenue expense, right? The revenue expenditure is used up in a few days. Now when it comes to revenue expenditures, it will last like long last only for few days. For an example, petrol, once we fill the tank, once it consume, it's done. But when it comes to capital expenditure, it's not like that, uh, and does not added the value of the non-current assets. Now when it comes to capital expenditure, it's that payment, it's long last for few like many years. For an example, when we enhance the capacity of the machine, will long last for few years. Revenue expenditure that not increase the value of the non-current asset, right? But is incurred in the day-to-day running expenses of the business. Revenue expenditures are recorded in the income statement, which means the P&L. They are normally running expense. You can see buying a van is a capital expenditure. Repairing to a van is our revenue expenditure, right? Then after that, fuel is also revenue expenditure. Revenue receipts. These are receipts from the normal trading activities of the business. They include selling inventories to customers. They are included in the revenue on income statement. Now, revenue receipt means the selling of the stocks. It is goes to the P&L because those are income, right? Right. Revenue receipts from the normal trading activities of the business, right? The difference between revenue and capital expenditure, right? You can see revenue expenditure is the day-to-day running expenditure of the business. As such, it is chargeable to the income statement. Equity expenditure, in contrast, result in the increase in the non-current assets shown in the statement of financial position. Like equity expenditure in here, this means the like revenue capital expenditure, right? In another word for the capital expenditure, you can write equity expenditure, right? Another word for the capital expenditure, equity expenditure, right? Equity expenditure. You can see capital expenditure and the revenue expenditure changes in here. You can see premises purchase, it's a capital. Legal charges for conveyancing, it's a legal charges. New machine, installation cost, addition to assets, motor van, delivery charges on new assets, existing cost of the new office, extension cost of the new offices, cost of adding air condition to office. These are capital. These things uh, for the bring the assets into the present location or the usable condition, and these things will enhance the capacity and will long last a few things. Convincing means work done, usually by law, to change the possession of the property uh, from one person to another person, right? Revenue expenditure, rent of premise. Rent means it's for the day-to-day business operation, only for one period. Legal charges for debt collection. Now debt collection is kind of a another thing. If we charges for legal charges, it's a revenue expenditure. Maintenance of asset, repair of van, carriage of purchase and revenue. Now carriage inwards for the stocks, it is a revenue, but carriage inwards for the asset, which means a motor vehicle or something of a non-current, it's a capital expenditure. Redecorating existing office. When we redecorate, it's after we start the usage. It is just a revenue expenditure. Now, if we decorate the office before it start, it will add it to the place cost. Interest on loan to purchase a air condition. Now, once we purchase a air condition on bank loan or on a credit basis, the loan we paid, it's kind of a revenue expenditure, right? Right. The next, revenue expenditure. Right. Revenue. Revenue expenditure. Amounts we spend for day-to-day business operation. Day-to-day business operation and maintain non-current assets. And just remember these things, not increase the value of, not increase, not increase the value non-current asset, right? Incurred in the day-to-day running expenses, incurred the day-to-day running expense. Okay, right. I want right? Into incurred in day-to-day running operation is used up in a few days. The expense used up to long last in a few days, right? Right. So revenue expenses, these things, revenue expense, these things are expenses. So because of that, we write added to the record in P and L. We record in P and L, right? Revenue receipt means revenue receipt means revenue receipt. Just wait. Right now, sorry, yeah. Revenue receipt, which means selling inventories to customers. This way, selling inventories custom, right? I'm giving you as a homework. This is homework for you. You can have a clear idea, right? As a homework, what you need to do, right? Homework, by looking at the chart, right? Chart, right? The difference between capital expenditure and revenue. Capital expenditure, revenue. Capital means the, right. Okay, write it and raise your hand. Write it and raise your hand. Once you done, raise your hand. Yeah, when is the first paper? 28 or 20th? First paper is on when is on your first paper? Sorry, 29th. Second paper, November, right? 20 or something. So we have enough knowledge now. Once we finish the capital expenditure, so Sunday I'll take 1 hour to finish this one and finish the exercises, and another 1.5 for the 2 hours I'll take to do the past paper on poetic. Once you done, raise your Student, raise your hands. Right, okay. Let's do the class Monday, right? I'll update the time and so I'll update the time. Tell me whether you will be able to do the either morning or the evening. Thank you for the participation. Have a nice
Thank you, sir. Bye.
update.